Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look again at using the higher time frame chart for your large degree trend. In other words, the multi-time frame analysis which I've been discussing in previous videos. This is really important to know when not to trade. In other words, when to avoid setups that would have otherwise resulted in losses. A good example was yesterday on the USE Minis, which was the 6th of May. You can see here, Wednesday, and you can see we had some MTPredictor buy setups here in the mid part of the day. So how do we decide whether to take these or not? Well, for our newer traders we have our STF or strong trend filter, which is red for down, blue for up, black for flat. So you can see here this was telling you the large degree trend was down and therefore you wanted to avoid those. However, what we then move up to is using the higher time frame charts for our more experienced customers. So I just want to have a look at that on this particular chart. This we tend to use a time frame between 3 and 5 time frames higher. So for a 3-minute chart we'd go to a 15-minute chart. Now the beauty of this is we use what we call our DPs, which are our decision points. Why do we use these? Well, because they're leading indicators. Unlike the STF, which is a normal standard indicator, which is lagging, in other words, changes colour after the turn, the DPs are on the chart in advance. In other words, they're out there before the market even gets there. So I just want to look at how the trend would have been defined using these yesterday. This is our last swing into the last pivot high on the 4th of May. So initially you'd have actually had a DP from this low here. And as you can see, this was actually hit on the 5th of May, the day before. Then yesterday, early on in the day, we went down below it, and we had well, more than 2 consecutive closes. We normally say once we've had 2 consecutive closes below a DP level or beyond a DP level, the market trend is therefore defined as being continuing, in this case continuing on the downside. So after this bar here, you can see there's the second close, which would have been 10 o'clock yesterday. Large degree trend would have been confirmed as down. Down into where? Well, we go back to the last main pivot low, which was back here on the 30th of April. Right mouse click, put our DP on the chart. And again, I must stress that these are leading. So even before the market got down there, this support level would have been on your chart there waiting for you. And just look what the market did. Well, it carried on down, and look where the low of the day was yesterday. Which came in a bit later in the day, but just look where it was, right at that 15-minute DP support zone. So that would have been on your chart ready as an area of where you'd anticipate potential support to come in. So how does that help us on the 3-minute chart? Well, if we go back to the 3-minute chart now, you can see these levels stay on the chart for you. So as I've already discussed, on this breakdown here early in the day, this would have confirmed the large degree trend to be down. So therefore these buy setups would be against the large degree trend. So in other words, you'd have been avoiding these and not taking them, which would have been good because they would have been resulted in losses. The market then came down, and it came down right into our higher time frame support zone. Again, this would have been on the chart way before the market even got down here. In fact, this could have been on your chart even before yesterday even opened. So of course this would have helped you in, say for example, you're using other techniques as well as MTPredictor in your own trading. This would have helped you avoid trying to sell the low of the day, which obviously is a bad position to be in. In other words, this would have helped you anticipate that the market was going to make a low here and reverse. And as you can see, that's exactly what it did. So even though there wasn't a particular MTPredictor buy setup at the low here, this did actually give you warning that this was an area of where a low was likely, and as you can see, that actually nailed the low of the day absolutely perfectly for you. It is amazing how many times we tend to catch the highs and lows of the day in the USE Minis using our higher time frame charts, and this is yet another example of us nailing the low of the day there with our support zone. So that's why I wanted to do today, this video today, to show you that sometimes what you don't do is actually more important what you do. In other words, sometimes avoiding trades that would have resulted in losses is actually important to keeping your trading balance intact rather than just making profitable trades. So although there would have been no trades yesterday, that would have kept your trading account intact, ready to then come into the next day, which actually sometimes is more important than just making profits. But as I've already said, even if you're doing other trading as well as MTPredictor kind of trade setups, nailing the low of the day there would be absolutely beautiful. And that's caught that low very nicely. Actually, one other little PS I can actually do yesterday is we do actually do a gap trade, which is very good indeed. And this is where we have, you see at the bottom there it says inside gap. Inside gaps tend to close, and the US E-mini, the ES opened up there. But where did it reverse to then start filling the gap? Well, it reversed from the DP from the last swing into the prior low here. So this level would have been on your chart in advance, and actually, as you can see, would have caught that level there to give you an area of where the market would then reverse back down into the previous day's close. We have a very neat tool in MTPredictor 7.5 where you can show the previous day's high-low close. So here you can see that this was the close level in green, so you'd anticipate the market to reverse from that resistance level back down to the close, which it did there as well. So there were some additional trade setups in there as well. In fact, one of our customers did very well on the YM yesterday. He actually had a DP level from this prior TS2 sell the previous day, which as you can see would have actually been a nice downtrend, but he had this DP level here again, and as you can see that nailed the very high of the day absolutely perfectly, and he managed to catch a very nice short trade off that decision point level as the YM declined there as well. So that was a very nice trade there as well, but I didn't really want to talk about that. Today's video really was talking about when not to trade rather than when to trade, and this was defined by using our STF color coded indicator if you're new to MTPredictor, or if you're more experienced, our higher time frame DPs off our higher time frame charts, which as I've already shown you here, I'll just put these back on again, would have not only defined the trend as being down yesterday, but also would have actually given you a level in advance that nailed the very low of the day for you. So hopefully this has been a good educational video to show you again how to use multi-time frame analysis to help enhancing your trading on your shorter term charts.